Now, findings from Hometrack paint an even bleaker picture. House prices fell for a 9-month in March on a glut of supply. The average cost of a home slipped to just over £150,000. In the capital, the situation may be turning around. London prices rose, reversing 8 months of decline. Well, Richard Donnell, a director of research at Hometrack, joins us now. Richard, is there anything that you find really surprising? Because we're still in a lot of uncertainty. Once interest rates go up, is that when the situation will become a lot more painful?
I think the housing market is slightly defying a lot of popular belief because of the weakness on the demand side. The market's trading off very thin volumes, so we've seen a bit of a bounce back in demand over the first 2 months of the year, largely off a real weak end to the final part of 2010. And really it's all about the demand side, impacts on cost of living, impacting people's take-home pay, and yes, interest rates remain the sort of the worry for the market.
But so what do you, I know it's difficult to foresee for the future, but what kind of trends are we going to have from here until the end of the year? A little bit of stagnation, are prices going to go creeping up because still this lack of supply? I
think we're going to see prices under gentle downward pressure. You've got this real regional differences in 5 regions, particularly the north of England. You've got the average time on the market at more than 3 months. In London, it's running at half that level. You're going to see this very big north-south divide in the market. I think overall the pressure is going to be down on demand. We expect prices to be tracking down over the rest of the year, but at a much slower rate than we saw at the very end of last year.
There's no danger that prices will collapse because of what we're seeing. We had a profit warning from Dixon's yesterday. It's getting tough on the high street. People are scared. There's austerity measures coming into full force. Is there danger that prices will drop significantly?
Our view isn't that's not going to be the case. I think the retailers are suffering because a lot of them are linked to transaction volumes. We've got record low transaction volumes in the housing market. That's not going to go away for the foreseeable future. That's making prices more volatile over the short term. You know, we think prices are going to be down at about 1% over the course of this year.
And of course, mortgages are just becoming more and more difficult to gain, especially for first-time buyers. What kind of effect does that have on prices?
Well, first-time buyers are sort of largely out of the housing market at the moment. About 2/5 of buyers are buying with cash. There's investors in the market. So we've got this sort of partial housing market operating on thin volumes with different participants. The overall pattern is house prices remaining relatively high but unaffordable, and that's why, you know, house price inflation is going to remain muted for some time to come.
Richard, talk to me about London specifically, because this, of course, is a microcosm. You have a lot of foreigners, you have also a lot of bankers, and there was concern maybe 1 or 2 years ago that if taxes went up, if the government were too difficult on a lot of the foreign corporations, then these guys would, you know, go to Switzerland and just leave the country. This hasn't happened. How much is that sustaining the property market?
I think London's placing quite a big gloss on the turnaround over the last 2 months. We saw central London up by % in the last month. East London is down by -2%, -0.2%. So even within London, there are some big differentials. It is about equity, it's about the bonuses, it's about the lack of supply, keeping the prices up in central London. I mean, the central London market really is plugged into sort of sentiment of the world economy. The East London housing market and other more domestic parts of London are driven by availability of finance and domestic demand.
And this is going to remain against status quo for the near future. We also have a lot of demand coming from the Middle East countries because, of course, they speak English more frequently, possibly, than France.
The London property market remains attractive to overseas investors for the stability. Yields are not as low as in other parts of the world. So, you know, external overseas demand continues to come into the London market and supports prices in the centre of the town.
Richard, thank you so much. Richard Donnell there.